still grazing away outside. We'll start talking and they'll start drifting in. If you could just sort of introduce yourself, for 30-second elevator pitch, a bit about yourself and your company.
Hi, everybody. Steve Ivankovich, Chief Executive Owner of Atlas Residential. We started in 1991 as in America as a rental apartment company. And now we are a global company with 20,000 units. At our peak before the crash, we were owning and operating about 70,000 units. We sold pre-crash. I wish we sold them all, but we sold most of them. And then we started buying again in 11. So we are effectively just a rental apartment company with a global footprint.
Fantastic. Ben.
My name's Ben Hall. I'm the head of investments for Q Investment Partners. So we're a Singapore-based fund management business. We invest into the US and the UK, mostly into development projects and into the co-living and student accommodation sectors.
Fantastic. Joseph.
Hi, Joseph Chan from Gore Capital. We are an Asian-based investment fund, mostly property-heavy. Right now, about 23 billion AUM. And then we invest in co-living, asset-heavy and asset-light in China, also student accommodation in Australia.
Fantastic. You know the rules. Please feel free to ask any questions at any time. Straight away, yes?
What is co-living?
What is co-living? Who wants to answer that? Ben?
What do you think it is?
I have a lot of opinions, but I just think it's real estate for people to live in.
Correct.
And that's the panel. Thank you very much.
Well, I'm serious. My question is, for you as investors, what is the definition of co-living, and how different is that from, say, the U.S. multifamily or other residential rental properties?
So, who'd like that question?
I'll start. I think it's very country-specific and region-specific. Because a lot of times when people think about co-living, it's shared rooms. But in China, co-living is still one person, one apartment. It's mostly studios, one bedrooms. It's just smaller rooms and more community space. And when people talk about co-living, they think about just 100 to 500 unit buildings, communities, where on top of the small rooms and the community, there's also another where there's like community level of activities on top of that. But that's not too much difference from traditional multifamily. It's just that we target the 25 to 35 years old if it's the asset-heavy model. And when you go into the asset-light model, then that's also the traditional, that's the master lease model. So people usually talk about is co-living as the asset-light model in China, but people also we're starting to get into the asset-heavy. It's just targeting younger people, smaller apartments.
We'll touch upon a bit the different models later on.
We've been doing co-living for 40 years. It's called roommates. I think people just, we talked about this earlier, I think it's just a way to rebrand it to, anything with a millennials like especially codependency and that sort of stuff. So they slapped a co-living and make it fancy, but I think it's roommates, people living together, trying to, maximize efficiencies. And I think you're right. It means different things in different places. In places where the rents are very unaffordable, like Hong Kong, you're trying to create an asset class and minimize rents for people, and the oldest way to do that is getting a roommate. So it's a way to make rents affordable, I think.
And our perspective is really UK and Australia. Where it really clicked for us is because we are a student accommodation investor. So when we were looking into co-living, we spent about 12 months, and I had my investment analyst prepare a financial model, and I was on him for a month. You prepare it, start from scratch, have a look, and let's see how this works. And then one day he just said, we just use the student model. It's exactly the same. And it went from an Excel perspective when the team understood it like that. And then we started from that perspective. We said, well, this just feels like student accommodation 15, 20 years ago in the UK, which is now one of the largest institutional traded asset classes.
Yeah. Touch upon country specifics in a couple of moments. Let's we want to start this off. I mean, co-living as a concept is blowing up. Is it due to affordability crisis, or are we looking at a millennial preference? Are we now in generation rent? And for the youth coming up, is the idea of owning a home no longer a dream for them, purposely?
I'm going to start with that. I think it is. In any rental apartment sector, you want a customer who's an aspirational homeowner. They pay their rent on time. They are, good social standards behavior. They're responsible. And certainly in the U.S., where a good ratio has always been 65% homeownership, 35% rental. The business model is you go to university, so you're used to living in a dorm. You get out, you get your first job. It doesn't pay you very much, so you've got an apartment with 4 roommates to split up the rent. In 3 or 4 years, you get a raise, you get a little more money, you get your own apartment. Maybe that comes with a girlfriend, right? That ultimately becomes your
boyfriend.
Yeah, exactly. Maybe that girlfriend becomes your fiance and then your wife, and you're still renting for a while. You moved around a couple jobs at that point. Maybe you've got 2 incomes in the house. And then at some point in your early 30s, when the child is ready to go to school and you're looking to move to the suburbs or a place, then you buy something. But it's been the natural cyclical progression of different levels of roommates to home ownership, and it's just human nature. So especially when people are family driven. But I think you hit the nail on the head. It's ultimate affordability, where again, New York and London act very different than, let's say, Dallas or Manchester, where it's fundamentally easier to own a home, which is maybe one of the reasons those cities are growing, because of the affordability.
Joseph?
I'll add to that. I think a lot of it is also by mobility, just people moving around. The biggest demands are always in the global gateway cities, in the tier 1 cities. A lot of young people, a lot of professionals moving around, and they look for flexibility. So what co-living offers a lot of times is that it can be 1 year, can be 2 years, but can also be shorter term. And then a lot of times, before people might, in that age, they would look for roommates, like when we're in New York, looking for roommates, Craigslist, etc. Now people just, they can find affordable units where they can afford on their own, still that $500 to $700 US a month. And so I think it's that technology-enabled mobility, so younger people now can go everywhere and live in these co-living units.
Yeah, I'd agree. I moved from Australia to Hong Kong 5 years ago yesterday. 2.5 years after that, I moved to Singapore. And in that time, it was extremely hard to be mobile and to move and to figure out all the basics of a new country. So when my wife and I moved here from Australia, we had 150 square meters. We moved here with 42 square meters, triple the rent, 1/3 the space. And then somehow I had to figure out the deposit, cash for the deposit, how to sign up for the electricities, all the basics. That was a very, very stressful process. And I was going into a new job as well, into a new country, into the previous protests. So all of that combined, many other people didn't want to take the job that I took. So if you're facilitating that process and making it easier for people to be more mobile, to move countries, to move jobs, then really you've got a good product. I think co-living in many instances, especially as we're seeing in Singapore at the moment with an asset-light group called Hamlet, is really just facilitating a lot of people to move from Hong Kong to Singapore, which is a trend obviously starting at the moment.
So it's affordability and a preference, because people need to be more mobile now than ever. Does anyone in the audience have a strong opinion either way? Is it just millennials, or is it simply affordability?
Really, everyone keeps talking about millennials for co-living, but that's really just because millennials are the most open to change. They're the most open to using their iPhone, to apps, and to get used to new things. But if you walk through some co-living buildings that have been open for a couple of years now, you'll see the demographics getting older and older. Like my mum that's about 60 years old, she's a divorcee. She's perfect to live in co-living because she needs to meet people, she needs to socialize, and she doesn't need all the waste of space because we never come home. So she's not ready for retirement. So retirement is kind of co-living. But really, who wants to be branded as a retiree when you're still working? So co-living, I think, is not just for millennials, but it is for affordability, for millennials, for older people, for just people to live, because it's only a bed and a roof.
So do you think it says an asset class is ready to be put into different generations, for it to almost like a co-living 2.0, different demographics to move in quite easily?
Well, as owners and operators and investors of real estate, you know, it's tough. It's a fixed asset, right? You can't, if we were in the t-shirt business, we can change our inventory depending on the demands of the customer. Well, you have an apartment building that was built and maybe the demographics or the rents or the demands have changed in 10 years. So you're stuck with a fixed asset that is very expensive to change. So you have to, through a management or a creative way, you know, adjust the way the market has reacted to your property, either through refurbishment, but much easier, cheaper through management. And if, you know, our portfolio, when Lehman crashed and everyone was losing their homes and their jobs, you know, the level of people doubling up in our apartments went up 50%. That's co-living, right? Now, I think the difference is, and there's always the law of unintended consequences, and we see this as the industry grows in the States. I think there's going to be a fundamental problem. I think it's okay if the people get together and themselves find a roommate. I think there's potential problems we haven't thought of as an industry when the landlord is finding roommates and putting people together. I mean, the sort of crude analogy I would look at, if I'm looking for a roommate on Craigslist and I happen to get Jeffrey Dahmer as my roommate and I made that selection, that's my problem. But as the landlord, if I stick Jeffrey Dahmer working with somebody else unintended and he just happens to eat his roommate, that's the landlord's problem and a big liability. So I think as the industry evolves, right, and we're trying to figure out how to make it affordable and maximize our revenue, but also dance around potential liabilities and unintended consequences.
The landlord will have too much of a say in shaping the actual community there. Maybe you'll have just a room full of hippies or a room full of right-wing people. It's quite difficult to... we have a quick question before...
Yeah, just a question on the predictability of the market. Differently from student accommodation, where you know what the market is, because you know Sharjah, University City, more or less you can tell how many beds it needs. What's the difference in estimating and understanding the market trends when it comes to co-living, because you don't really know who the market is?
Who wants that grenade?
That's where we hire you to get your reports to figure out what the supply demand is.
It's no different to looking at residential. It is just residential, and really just a really fundamental analysis of something that you're building. So you always have a target market unless you're speccing it and trying to take too much risk. Measure your target market. You want to make sure that they can afford the rent. So I guess 30% of their income you know that they can pay in rent, plus all the other added on costs. Yeah, you can't sort of size it up with university students the same way, but there is much more data out there on the general population and what they're being paid and where they work. So it's actually a bit easier to try and size up your target market and work backwards to know what the rents could be.
I think it's a very simple formula. And so a rule of thumb in I think any rental apartment industry is you qualify your residents based on the rent needs to be 3 times gross take-home income. So if somebody is making $30,000 a year, they can afford a third of that on a monthly basis. Now, if you need to charge 2 times of that in the rent, and the income of your clientele just isn't there in the marketplace, you're probably not going to be developing that apartment. Then maybe you're trying to figure out, well, okay, is there a roommate situation? Is it a young demographic? Will people to be living together? Do I need to make smaller, more affordable units? It's that basic math, right?
Yeah, I have a question for the panel about the rise of co-living and what its origins were. How much of it do you think may have been, at least in the U.S., caused by the devaluation of single-family homes in the last recession, as well as not just a growing millennial demographic, so the demographics have had an effect, as well as probably the aging baby boomer cohort, going forward? I mean, how much of that is at play here?
Who'd you like to answer that? Oh, anyone?
Me? Ooh. Yeah, I think it's always once bitten, twice shy. I think nobody likes to get foreclosed out of their house. right? And if they can, you know, I think those are, at least in the US and probably in the UK, those memories are still fresh in people's minds. So I think the idea of renting a little bit longer, saving a little bit more money, and making a bigger down payment is appealing. I think some people will never go back to owning with the flexibility. I think interesting enough, we're seeing that in some of our UK assets, where people they made a lot of money on the gain of their home. They sold it, they're renting something, but they do own something in Spain or someplace warm, right, as their ultimate retirement home or investment. So I think that only is possible if you have a robust rental sector, whether it's co-living, you know, I think there are these housing swap websites which are fantastic. You know, that you can find somebody that, you know, is living here for 6 months and you're living here, and you just swap houses and share the overhead. You know, that's where I think the technology side of it is interesting. If there was an eBay of apartments on a global basis, which sort of VRBO and HomeAway and Airbnb is, but for longer term basis, that's interesting for landlords. But I don't think you're ever going to replace guys like us that own and invest in bricks and mortar and know how to operate it efficiently. The tech just makes our marketplace that much bigger.
Yeah, and I think you can look at developed markets globally, salaries are not growing the same rate as costs. Asset prices are going up, it's harder to buy a house, so your deposit's increasing. So as a younger generation comes up, my younger brother, he'll never get enough money for a deposit. But then why does he want to get a deposit to buy a house anyway? Because if he looks at it, the asset price is so high, what growth does he need to even make the same return that's been shoved down his throat since he was a kid, saying, you've got to buy a property, you've got to buy a property. That investment class is probably out of his reach and probably not that good a prospect anymore. So I got asked at another panel, well then where will people invest? Or where will people do their first investment to get on the ladder? And I think there are many other solutions coming out for that now, where you can invest, like in the UK, you're able to, or Singapore, there's a group called Stashaway, you're able to put your funds into that and invest much easier onto the stock exchange or ETFs or different parts. So I think the investment landscape changes, where really that first investment into a property as a 19 to 25-year-old, that changes. And it's kind of mentally in many people's heads that that's the first investment you should make. I'm in real estate, I've never bought a property, a house, a residential property. So I see it as completely different. We looked at a really, really interesting study for a property in the UK that was getting co-living planning approval, and they paid someone very intelligent to go back in time and figure out why people should live in co-living. And they went all the way back to when we lived in tribes. And when we lived in tribes, we were all that way back. Native Indians and how they lived in tribes, and people were generally much happier when we were with each other. But somehow, post the World War II boom, and when we were building these big McMansions, especially in the US and Australia, somehow we just disconnected from each other through wealth. But then we got much, unhappier. So really, I think fundamentally people want to come together, and now they have a better way to do it through technology, and then they're forced to do it because of affordability.
I'll just add to that a bit of the cultural perspective. Because I think even in Asia, say in Japan, where people are shaped by the last 30 years, anyone who owns a single family home has lost money. So my generation and the generation that's in the millennials, 20 to 40 years old, most of these people still do not want to own a single family home in Japan. But if you look at this part of Asia, China and Hong Kong, where anyone who has owned a property, single family home in the last 20 years, have made a tremendous amount of money. So even it's a lot of the similar East Asia culture, but it's just a financial experience in the last 20, 30 years could really shape the perspective. And in Japan, there's a huge multifamily sector, but the co-living sector is actually not taking off as much as in other places, because people are just happy to live in their apartments with less of the community element. So I think the culture, like when we talk about co-living, it's definitely very much cultural driven, and also each region, even each country is very specific and different.
I spoke about this with one of the other guests earlier today, and I think we take this for granted, living in places where you have security of ownership in dirt, like America, UK, or Australia, sort of British common law, also in Hong Kong. We have several mainland Chinese investors investing in our asset class in the US, and there's a ton of retail investors in mainland China that buy 1 or 2 or 3 flats in UK, in Sydney, in America, because they feel they have security of ownership. It's a real investment that they could pass on to their kids and their grandkids, where in mainland China, it's a 70-year lease, and it's a diminishing asset. So, you know, as somebody who takes that for granted, it's an interesting feature that, you know, maybe certain markets where security of tenure and ownership is unreliable, either with political or governmental risk, in markets, and maybe you'll see that as being a co-living feature in the market. Markets are different. You know, we consider ourselves McDonald's. You know, McDonald's doesn't serve hamburgers with beef in India, right? They do a market adjustment. So maybe to do a rental apartment model in a place where, you know, you don't have security, competition of ownership, there is this co-living model. But I think in places like the US, UK, Australia, because you can, ownership is aspirational, even among millennials. But that's a good thing. That creates a good customer. But maybe in other countries, emerging markets, maybe the co-living model is the right model, or some, you know, version of it.
I just want to bring the conversation back to something you said earlier, Joseph, when you talked about asset light, asset heavy. Because Gore Capital, you're the guys to go to for co-living in China. What are you seeing on this front?
The asset-heavy model just started. Stephen also knows that very well through his latest discussions, that Chinese government is pushing down the land price for rental apartments to create more supply for just rental apartments. We cannot sell those, so there's no market value as strata title unit, but those would be good for long-term investment hold. So that market is starting to become more mature. On the asset-light front, we have really seen that kind of co-working type of expansion. That, you know, everyone driving for growth versus profitability in the last 3 or 5 years. So in the last 18 months, there's starting to be a lot of consolidation. You have probably read about some of the big names going bankrupt, and when they go bankrupt, some of those, they do a structure where when you thought you were signing a lease, you were actually taking on there's an intermediary in between, a financial intermediary. So instead of just paying monthly rent, the landlord already collects the 12 months of rent. So when the operator goes bankrupt and then the tenant, the apartment is no longer available, the tenant is still on the hook for the payment. So we have some of those, you know, issues coming up in China. But it's actually a space where we're seeing a lot of groups now starting to move back to profitability versus growth. So the market has been a bit irrational in the last 3 years, because the whole model for asset light is the rental gap between what you pay and what you can charge. And then too much competition has driven up the master lease rent. And now we're starting to see that coming back down with all these groups consolidating in China.
Fantastic. Consolidation in China. Ben, you've done a bit of work in co-living, hence why you're on this panel. What are you seeing across APAC, and what companies have you been working with? Who the movers and shakers are you seeing?
Yeah, I think the people that are making the most noise at the moment in Asia is probably Hamlet. They're an asset-light group based in Singapore, but they're in Hong Kong, Australia, and Singapore, and India soon too, I think. They have an interesting model because it lets them go into markets where it's harder to go in, or where you can't even go in asset-heavy. So in Australia, it's very difficult, depending on which state you're in, to do co-living, you know, because of planning uses, being able to get debt. Australians are space greedy, so a 16 square meter studio just seems ridiculous to them until, you know, they leave their country and realize that the rest of the world isn't like that. So there's a lot of things that hold them back, but then an asset-light operator provides a really good solution to a developer that can't shift 20 remaining apartments. So if you have 20 apartments there and you're trying to rent them out and you're a developer, you're not a property manager, and they come in with a a one-stop solution to say we can rent these out, we know how to furnish them, we know how to market them, we have this app, we have all these add-ons. They're providing a solution, and they've done it many times over now in Singapore. And our partner in the UK that we work with in the US, they've been a co-living operator for 10 years, and that's how they started. So they're now an asset-heavy co-living operator, but they started off master leasing 1 5-bedroom apartment, and then they got 4 under a master lease, and then they got 10 under another master lease, and then they made retrofitted an old boarding house, and then they just went up and up and up until they built 550 beds, and then they built another 700 beds in Canary Wharf the other day. And so they evolved from asset light to asset heavy, and if they have the right advice or they have the right investors behind them and make enough money under asset light, they can transition to asset heavy, where they can customize a building the way they want, and not just try and solve solutions for developers, but invest then in the PropCo and OpCo.
I have to bring it in just because it's in the papers, but anybody who has been in property long enough, saw WeWork coming a long time ago as an asset-light model. I think, I've been through a couple tech cycles and stock market cycles, and the appeal of real estate is the fact that there's a limited supply of the planet. Nobody's manufacturing dirt. It's a real asset. It survives recession. It's there. It's been the oldest and best way of preserving wealth, since a guy put a stick in the ground and said, "This is mine." So in our simple calculus, and we're a quasi-family office, owning assets is good. And I think on an asset light model, you have to be really smart and you have to be really lucky, because you're timing cycles. As I said earlier, when Lehman crashed, our portfolio with leverage was probably 150% loan to value, right? It was, if we had to sell it, it was underwater. There would probably have been no buyers. But the good news is we didn't have to sell it. We owned it. It was cash flowing, and we took the view that the world would come back, and it did. So, if I closed my eyes and woke up 10 years after the crash, I wouldn't, I would have had more hair, probably. But it was, nothing would have changed. The business plan would have done. But if you're matching lease expirations and arbing lease rates, at some point those leases expire. So while we could take the bet and amortize negative cash flow or capital investment, knowing we could hold the asset for another 10 years and recoup that investment, when your lease is dead, it's dead. And if you can't find people to pay the lease rate or amortize your investment, you might as well hand the keys back there and then. You've got nothing to work for. So, people do try and get fancy, and I guess if you're going to do an asset-light model, probably a 5 or a 10-year lease is the wrong number. Maybe a 30 or 40-year lease, which is essentially a quasi-ownership. The secret to any kind of real estate is just staying power. How long can I own this thing? And because at some point it's going to be worth more than I paid for it, right? Unless it's coastal California after the earthquake, but even then, who knows? But that's what scares me about this asset-light model.
Coming back to it in a second, do you have any questions at this stage from anyone in the audience? Everyone a bit shy?
You can text it to us if you want. I got our phones. If you're
Or
shy,
just write us a note and fling it up here. It's fine. I'll run down.
Thanks, Michael. Edward Madden from Forum. So, gents, there's obviously a bit of a common theme, and there's some similarities across the different asset classes which have been broken up between multifamily, built to rent, co-living, as well as students. Do you see that in terms of the different physical buildings, there's obviously got to be a different level of amenity, and also they've all got the common theme of sort of a sense of community. Do you think you can actually merge the three sectors into the one physical asset?
yes.
Yeah, do you gentlemen agree? disagree?
Yeah, one of our partners' buildings in London is 20% student, 80% co-living. It was basically approved as a student building, and then they convinced the planners to let them put 80% to adults. And that works very well. It's always 97% let. But our building that we're capital raising now for in Chicago is the other way. So it's co-living but more multifamily. That we like more because we can still rent it to students. Nothing stops us doing that. But it gives us a larger, demographic we can go for. But I think we always think in terms of sort of, lack of a better term, cradle to grave. So, student, co-living, multifamily, retirement housing. And I think anywhere you sit on that continuum is defensive. And if you can get a building that can operate in 2 or maybe 3 of those 4, it's even better.
Add to that, we've also done a building where we combine student housing with hostels. So we have converted an office building in Perth, where it's about half student housing and the other half hostel. And the commonality is a lot of young people, transient, and also shared beds. You can have 2 to 5 beds in a room for both students and hostels, travelers.
But it's a financial question too. It's what's the value of the lease? Right? A long-term, a 12-month lease by somebody who's credit checked is going to be more financeable and more valuable than, maybe a bed with 4 individual units. So, and then it's a pricing question. And, so again, it really is a bit of a commodity analysis and a financial question.
Fantastic. We may have time for one last cheeky question. I'm not coming back down.
I'm having a good time with this whole topic. This co-living thing just cracks me up big time, boys. It's been around forever, always. I'm a kid that grew up in a Midwestern town, large state school with good academics. In the 60s, you call them kind of hippie pads. But I would say, and we're a company that does both student housing, multifamily, and senior housing. So I got the people from 18 to till they depart, is a good way of putting it. But I think it's exciting to hear. I think co-living is an affordability thing, actually, period. I love your comment, Steve, that's called a roommate. So I wouldn't get too lost in it. Now, we worry a little bit on the co-living. We're going to plop some of it in a 600-unit building we're doing, but we're having a hard time on a standalone type business or, to do co-living. So it's just been what our problem is. The one thing I would say is we love student housing because we've been doing it for so long. We've made a lot of money at it too, which is always good. And we've now shifted to be more of a core player. So we've got the right capital to do it domestically in the U.S. We're all over United Kingdom. And then that's very operator driven. And then senior housing is very operator driven. I see the co-living a little bit along the same lines too, but that's it. So nothing shocking, gentlemen. I think we're all I think it's a good asset class. It's going to be here for a while. In New York City and big areas where you can get a smaller space is great. I think your social aspect for elderly people is great. I have a sister that lives in an apartment building that I built. She lives in Ireland 6 months a year. She rents an apartment. She's well off. There's no perceived, she's not losing any status or class in whatever she does. So renting apartments, Steve, I'm with you, baby. We're going to take over the world with them, okay? And it has been one of the best investment classes in the U.S. over the last 50 years. Let me tell you, we're staying away from retail and offices. Who knows what's going on in that space domestically?
But wouldn't you prefer that somebody invents an Uber, that we just provide the space and somebody creates an app to drive customer to us to match people?
Yeah, that would be great. Yeah, and we on the student side, the one issue you're doing a lot of the roommate matching. I mean, I've got the average age in my management company is like 22, so. The leasing, you and I can't lease to students, you know what I mean? So that's just it.
The restraining order doesn't let me do that.
No, I know, but it's a fun world out there in the real estate world. We're in good, the for rent side of it's going to be around for a while, so that's what we like about it. But I don't lose a lot of sleep over it.
If I could, just want to add one thing to that. I know you're 10 seconds. 10 seconds. Full disclosure, we did a project in Shanghai, and it was an apartment conversion, and we called it co-living, and we put in some shared amenities because of the marketing benefit from that. The big point I think that needs to be addressed, and obviously we've run out of time, the difference between co-working and co-living to me, Co-working, you can put the CEO and the lowest paid employee in the same address with the same positioning. But in co-living, I think we've seen problems when we've tried to put people with a certain status in the same co-living space as other people with a different status. I think you're gonna see it across the board. So culturally, I agree with you absolutely. It's gonna be country and even in China, provincially and city, different subsets. And then finally, I think it's gonna have a social economic spread. There will be co-living for CEOs and there will be co-living for the rest of us.
Fantastic. Right, on that bombshell, that's the end of the panel. Please everyone put your hands together for Joseph, Ben and Stephen. Thank you, gentlemen.